Good afternoon, or I should say good morning, everyone. This is Brian Overbeat, the Senior Option Strategist at Options Play. I'm filling in for Tony this morning. He can't make it. So we're going to do a quick update on, well, everything that is driving the market seems to have to do with the geopolitical concerns and the deadline tonight. The president has said that we've got one more day before a bunch of things will happen in Iran, and this is what's driving the markets more so than any of the economic data that has been coming out recently. And so before we get too far into this, I always have to let you know that we're going to be talking about real securities today, and it's not meant to be a recommendation. If you're going to trade options, you should read the characteristics and risks of standardized options. It's available throughout the Firstrade website. And if you'd like a hard copy, please let them know. Past performance is not a guarantee of futures results. All right, so let's jump into the research report that Tony has put together. And one of the biggest things is to look at the non-farm payrolls. On Friday, the numbers have been all over the place and amazing in some instances and kind of crazy in others. But plus 178,000 non-farm payrolls crushed the estimates. But then again, after February, the number was minus 92K. But here's the bottom line is that the market's reaction was basically nothing. And this tells you what's going on. And I think most people have a good feel for this if you're watching the markets at all, is that the oil and geopolitics are what are really driving the marketplace. Everybody's got an eye on the Middle East. And the issue right now, a lot of things have been shut down. So oil is up again today. We see WTI trading close to $115 a barrel. Right now, it's up $2.46 already on the futures contract. And because of that, we're seeing the actual futures market down. The SPX is down about 0.5% across the board. And we're seeing the S&P 500 index down 30.75 in the futures market right now. Now, so far, the warning from what I've seen this morning is by this evening, if the deadline doesn't get extended or something doesn't happen, the escalation is going to be big in the Middle East. Trump extended the deadline. He's done it twice already. The market likes the extension. But in general, that rally always seems to get sold. So the more and more that there's a relief rally, if you will, that relief rally gets sold harder and harder every time when something doesn't happen. So as far as Tony was concerned, everything that has been talked about, as far as earnings are concerned, the XLE and the OIH, which are ETFs that track the energy sector, they're both about flat today. XLE is up just a smidge. OIH is down just a little bit, but continued Gulf infrastructure attacks confirm the physical distribution is getting worse. So companies that are benefiting from high oil prices have been doing well. There's been a little bit of a sell-off. Almost, it's interesting to look at the Iran watch list that Tony has set up and see that almost every stock that's in that watch list is currently, if you look at the charts, almost every one of them has had a strong run-up and then a short-term sell-off, taking some gains. So at this point in time, I do expect more of these energy stocks to bounce. So stocks don't usually go straight up, and that's what we're seeing here now, is that the markets on a lot of the stocks across the board have sold off a little bit, and now they're looking to head back forward again. So as far as holdings are concerned, longs, anything in the energy space is still looking good. Index hedges, put spreads on the SPY and the QQQ remain in place. If scenario 2, let's go back to scenario 2. Let's go up here. Trump strikes energy infrastructure. This is the escalation scenario. Bombing civilian power plants would represent a new phase entirely. Iran has promised to completely shut down the straits and attack the energy facilities. If that happens, then obviously the protection is going to pay off. The VIX right now is actually even higher than 24.5, but it's hanging there. It's not leaving at all. And if you look at the actual futures contract that go out to the end of the year, they're still hanging in the same level as the short-term option contract, i.e. the spot, at 24.5%. So none of this volatility as far as the VIX is concerned is going to go away anytime soon. And right now we actually see the VIX trading at about 25.5 pre-market. Private equity, it's also a concern. Blue Owl's gating. Blue Owl is one of the private equity companies that is in danger a little bit. Our private credit research map, the exact contagion channels. The 39 names in the report are in the watch list. Gold and short duration. So a lot, if you're looking to get short the market, an area to be short, to go to pile on, if you will, is in the private equity space. Even smaller regional banks are at risk. There's a few of them out there. That's an area that has been bearish and could get more bearish if things turn to the worst. And then on the short term, gold is down a little bit today, which surprises me, but we see silver is up. But gold and short duration bonds as portfolio anchors. Gold did have a little bit of a sell-off, so I do think out of the two, I think gold is out of gold or silver at this point in time. And the underlying ETFs are GLD and SLV. Those stocks are trading our hedges compared to the marketplace in general, as opposed to buying put spreads in the SPY and the QQQ, adding some gold and adding some commodities to your portfolio. And you can easily do that with ETFs. Is not a bad hedge for this marketplace at this point in time. Here's what we keep coming back to is that the market wants the war to end. Every piece headline is a rally. Every extension gets bought, but the physical reality on the ground is deteriorating. Gulf refineries are burning. Hormuz is still running at a fraction of the capacity, and the deadline that was supposed to be forced resolution expires tonight. That was Monday night. So at this point in time, today is going to be an interesting day, and I think everybody's going to be on edges. If we look at the markets, the fact that the S&P 500 index right now, it's leaning more bearish, but as we head into the marketplace, but being down 0.5% on the open, VIX is starting to get elevated. All eyes are going to be all eyes are going to be on the Middle East. All right. And so today is going to be a big day for the markets. Now, some of the stocks that are moving this week that are showing some outperformance, we see, well, let's put it this way. These stocks that are outperforming, it's hard to get bullish or buy anything in this marketplace right now. The Iran watch list is definitely on red. We got the VVIX, the VIX of the VIX is up around the 120 level. We're also seeing the VIX just continue to creep higher. But some of the stocks that are worth mentioning is PNC is one of the stocks in the financial area that has a potential for a breakout. I think at this point in time, it is down a little bit on the market along with the rest of the market. Let's see where PNC is at right now. Uh, we currently see PNC Bank, yeah, it's down 0.5% at down $1.13. So you would want to see if any of these stocks for a potential breakout, you'd want to see at least a little bit of a move to the upside, some positivity in the marketplace, and that is not happening at this point in time. eBay also is one of the stocks in the area that has potential growth. eBay right now is down down a little bit more than market. It's down 79 cents or almost 1% in the marketplace at this point in time. And the outperformers, as far as if you're looking to get long, I think one of the easiest areas to look at is anything in the energy sector and ETFs that track instead of trying to pick one particular stock in general. That's almost the safest way to try to play it. But this week is not a bad week to just stay out of the markets, watch what happens, especially if you want to get long. Now, we're heading into earnings. And JP Morgan is usually the start as far as the financials are concerned. JP Morgan's going to be announcing on the 14th, which is Tuesday. And to me, that's usually the start of the earnings calendar. That JP Morgan will be a big one. Then you have Goldman Sachs. There'll be a bunch of people that will be announcing on the 14th before the open. And that will give us a lot of segue into some of the issues with the credit markets, just in general. Now, here we have the buy list. There's a couple of stocks that came off. Carrier and Home Depot are no longer on, or Oracle just can't seem to get out of its own way. It's as far as buying, Oracle, I think, is a good 10-year hold, if you will. But in the short term, the credit markets and their exposure to their debt is just too high overall. But on a longer term basis, they're trying to obviously set themselves up in the data in the data space, and a big spend on trying to provide the power and the data that the AI revolution is chasing. NVIDIA down a little bit, still bullish on it. Nothing is really bouncing out as far as any of the stocks. CME has been a strong player. And also we see Cboe Global Markets, otherwise known as the Chicago Board Option Exchange, because of the betting markets, a lot of the exchanges are doing fairly well. CME is one of them, one of the standouts in that space. All right. So Tony also put together a bearish equity analysis, and I think that there are a couple of stocks in here that are worth mentioning, and so I wanted to bring them up because if you're going to do anything in this marketplace, getting bearish is probably the easiest the path of least resistance in the short term. And I mean, the first one that really jumps out to me, and we've done quite a few daily plays on airlines in the short sense, selling some of the volatility, selling some of the premium UAL and DAL. Delta Airlines has actually been bearish, obviously, because of fuel costs, everything that is happening in that space, not to mention the government shutdown. And those numbers are going to start showing up in this next round of earnings. But with Delta Airlines is one of the bearish stocks right now in the short term. But this is a potential buy if we get the markets to go down. If we see an opportunity to come in and buy, this is the one company in the airline space that has outperformed. But with that mentioned, in the short term, the recession risk to premium cabin service, that is a scary space to be in. Also to mention with United Airlines, UAL is one of the stocks that we recently did a short call spread on, and that's down right now. UAL is looking scary today. It's down $1.47, 1.62%. And let's look at Delta. Delta's probably going to be down right along with it. And this goes along with the price of oil right now moving up. We see Delta Airlines down 1.3%, down 87 cents on the day. So it's easy to make a bearish case to get bearish on the airlines. Ultimately, the analyst marketplace is calling it a buy, but in the short term, it's very easy to get bearish on anything in the airline space. Expedia is also in the travel demand. Here's another area where options play stance is bearish across the scenario. Here's the bear case scenario. Travel demand normalizing, consumer spending vulnerability at this point in time. And that also is true. The consumer has kept the markets afloat. And if the spending in the consumer area starts to wane at all, Expedia is one of those stocks that's going to have to pay for that, on top of obviously a lot of the retail stocks, and there's a few of them that are in this list that go along with it, but this is the travel space with Expedia and Delta Airlines. And let's run to the next version. Intuit, INTU, the consensus of the marketplace is at a hold. AI disruption threatens the TurboTax moat. This is a software play, and one of the big underperformers in the marketplace is Intuit. Bearish case. AI disruption threatens TurboTax. Anything that's in the software space, mail chip acquisition is an underperformance or organic growth decelerating sharply. And across the board in the software space has been beaten up. This is one of the companies you could focus on. ServiceNow also applies in that same area. AI monetization uncertainty is also an issue here. The company, the valuation on ServiceNow, I think, is a thing to focus on. The forward PE being at about 27 times earnings. The industry average is about 16 in this space. And if we have any stocks that have a little bit of a valuation problem, it's easy to get short those stocks, especially if you're looking at anything in the software space. Take-Two was one of the stocks we also got short recently, TTWO. Adobe has been struggling, trading at a very low actual valuation at this point in time, but that's also just a sign of a company that's a solid valuation that's just been beaten up. So anything that has any valuation problems in the software area is getting cremated. And PayPal has really struggled quite a bit. I've always been surprised about the PayPal scenario and how bad this underlying stock has been beaten up. Their management is trying to do stuff, but also this is one of the stocks that is in the bearish sentiment holding. to go along with PDD, which this is Timu regulatory existential risks, China's subsidy scrutiny. This is another stock that is a high flyer. It's always tough to judge in the space. You still have consumer spending, so and obviously China issues. And then Shopify, we've had quite a few short trades in Shopify. Once again in the software space and consumer spending once again. So Shopify has really struggled and has been a solid short. And then let's fly through a few more of these. Oh, United Health, but United Health had a strong move on the upside. It is bearish, but recently the Medicare rate, they came back around, and there were people that were anticipating that this move is. So overnight, United Healthcare and a lot of healthcare stocks, because of the increase in the spending budget on Medicaid and Medicare over the next year, they raised the potential payouts, and so all of these stocks have really moved. All right, so right now we have the S&P 500 index. Well, it's hanging in there. It's down about 28 points, so it's bounced a couple since the beginning. We were down 30 to start, or about 0.4%. And we see that those numbers are pretty solid across the board, but the Russell 2000 is actually down 0.75%. So that is leading the way down, which always, it seems like the small caps are going to get beat up in a rough marketplace like this. That's going to be it for today's market update. My name is Brian Overby with Options Play. Tony will be back next week, and hang in there. Be safe out there. Thanks for coming, and we'll see you. I guess we'll see you. Tony will be back on Tuesday, and then this Wednesday we'll have another education piece from Options Play. Thanks for stopping in.